a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about international stocks and ETFs, which are actually beating the US stock market. So let me share my screen and talk more about these international stock and ETFs. So the S&P 500 is now up 17% year to date and on track for its third consecutive year of double digit returns. And that is because stocks continue to climb the walls of worry. And these gains are mainly driven by AI enthusiasm and very strong corporate, very impressive corporate earnings. And today, Nvidia became the first company with a market capitalization of $5 trillion. So, obviously, many critics are now warning about a potential AI bubble, and some investors are looking at international stocks. And international stocks have, in fact, done even better. The MSCI All Country World ex USA index is up about 30% year to date, and that is on pace for its widest outperformance against the broad US indexes in 16 years. And that is according to the Wall Street Journal data. And in general, US stocks had outperformed international stocks since the global financial crisis, except for brief periods in between, like in 2022. And as I mentioned earlier, these gains are driven by AI enthusiasm. And additionally, US dollar is down about 9% this year. That boosts returns of foreign indexes in dollar terms. And this dollar weakness has resulted mainly from a rising fiscal deficit, trade and tariff related uncertainty, and growing concerns about the Federal Reserve's independence. And that all that had resulted in the Sell America trade around April after Liberation Day. That had slowed, but many investors are still looking at international stocks. One reason is that international stocks are much more attractively valued after more than 10-15 years of underperformance versus the US stocks. That said, the outlook for US stocks still remains quite positive given that the US economy and earnings growth, they are still stronger than the rest of the world. They are growing at a faster pace than the rest of the world, than most of the rest of the world. And UI and the US remains a leader in the AI space. Led by Nvidia, we don't have any other Max 7 like companies in the rest of the world. That said, most US investors, they have a persistent home country bias and over allocation to US stocks. So, for sake of diversification and finding better valuation, it makes sense to look at some of the international stock ETFs. So, let's take a look at three international stock ETFs, which are quite different from one another. So, the first one that I'm highlighting is one of the most popular ones in the space and one of the cheapest ones as well. It is by Vanguard. The ticker symbol is VXUS. This holds 8,700, a huge basket of developed and emerging market stocks, excludes the US, just 5 basis points expense ratio, and $111 billion in assets. Now, if you want to learn more about this ETF, you can go to the code page on Zacks.com. You can read our research report articles. Using the link, you can go to Vanguard's webpage for this ETF and learn more about what it holds. So, as I said, number of stocks 8,700. And if you look at the holdings, Taiwan Semiconductor, Tencent holding Alibaba ASML, which is a Dutch chip equipment maker, Samsung. These are the top holdings in this ETF. And whereas the US indexes, they are heavily weighted in technology. About 30% of the S&P 500 index is in tech stocks. You get more diversification, more exposure to other sectors in international stock ETFs. For example, here you see financials have about 23% allocation, and then industrial about 16%, technology about 15%. Looking at countries, you will see that Japan, China, UK, Canada, Taiwan, these are the top countries in terms of allocation. The second ETF that I am highlighting focuses on value, because one of the attraction for international stocks is their more attractive valuations. So this particular ETF, IVLU, this holds 343 large and mid cap developed excluding US stocks, focuses on value characteristics. 2.8 billion in assets, slightly more expensive, 30 basis points expense ratio. And again, using the link, you can go to iShares webpage for this ETF. And if you see what it holds, British American Tobacco, HSBC Holdings, Toyota Motor, these are the top holdings in this ETF. And again, you get kind of similar sector allocation in the CTF. Financials, industrials, and healthcare are the top sectors, and Japan gets about 30% weight. Then you have UK, Germany, France, and other countries. This focuses on developed markets. Now, the third ETF I'm highlighting is quite different, but I selected it because this has done very well this year. So, by Cambria, this is actively managed. The ticker symbol is GWELL, and this focuses on the cheapest countries in the world. Has a rather concentrated portfolio of 113 stocks and slightly more expensive, 66 basis points, and smaller to 353 million in assets. Again, to learn more about this ETF, you can go to Cambria webpage using the link on zax.com. So this focuses on the cheapest countries in the world based on CAPE ratios, cyclically adjusted price earning ratios, and then equally weighted to the cheapest countries in the world. The portfolio that you will get here is very, very different. You must not have probably heard about most of these stocks. So, Moneta, Money Bank, CEZAS, Mineras SA. So quite different exposure you will get in this portfolio. And Cambria has some good research. So you can read about their research and why it makes sense to hold international stock ETFs using all these research and insights on their webpage. Now, on the next slide, I have the comparative performance versus the S&P 500 index. So, as I mentioned, GWELL, the one by Cambria, is the best performer. That is up about 47% year to date. The iShares ETF is up about 37%. The Vanguard ex-US ETF is up about 30%, whereas the S&P 500 index is up about 17% year to date. Thanks for watching. Make sure to check out zax.com/promo for an interesting offer. Make sure to subscribe to our YouTube video channel so that you do not miss anything. And I'll see you next week.